first story that I want to pick up this week is around the use of contactless payments. We're well used to that, using contactless payments here in the UK, but right across Germany and Europe as well, very much embedded into the way we make payments. Indeed, in 2024, according to UK Finance, there were 19 billion contactless payments here in the UK. It was sort of 40% of the payments, and with an average payment of contactless of £18. That's quite a significant amount, because the first contactless limit in the UK was just £10. So it shows how our use and acceptance of contactless payments has risen. Back in 2007, we found that the use of contactless payments radically changed. We brought out Latte. It was a TfL moment when they started taking contactless as well. Very much became embedded in the way we make payments. And of course, that early limit of £10 back in 2007 soon became £15, soon became £20. COVID, the desire to transact without touching money or people or passing things across, rose the limit to £45. And of course, in 2021, it took us to £100 as a contactless payment limit. A fantastic amount, covering the multitude of the payments we make every day. But of course, this week we saw an announcement from the authorities that actually the banks have got a lot more freedom now in setting their contactless payments limit. And no longer do they do it with a universal limit for the industry, but they can choose their own amount on a bank by bank basis, and indeed allow customers to vary that amount, perhaps even to a lower amount of that app as well. What a fantastic thing. If all you want to use a contactless payment, but you're a bit uncomfortable with the amount of money, you can start using different levels, and perhaps a £20 or a £30, something you're more comfortable with. And of course, it's a great win, isn't it, for the regulatory authorities in the UK, saying, banks, sort your own limits out. Get that right balance between convenience and risk, set your own limit, allow your customers to use that, allow them to vary it. And that's a real big win for the authorities, and also supports the government, the Labour government in the UK's growth agenda. But of course, after the middle of this week, when it was available, we're here now on Friday. Well, none of the big banks seem to have done that. None of the incumbents seem to have moved the £100, showing no appetite to do that. And it remains to be seen whether any other banks change the £100. And I think somebody was asking me what would be my view on this. And I think I would say that I think £100 is about right. It balances between convenience and trust in terms of making payments, and confidence in terms of fraud. I like the ability to tailor the amount. That's quite good. But I do think the much better solution is tokenized cards in a wallet. It seems to me much more convenient, much easier to use, but also a lot more secure and safe instead of carrying around. But I think the other question is, where do you stop? If you move the contacts limit up from £100, what do you do? £200, £300, £400? Where do we stop in the coming years? And it feels to me a little bit like the contactless payments, if we go above £100, will start falling into the trap that the check guarantee card fell into in the UK. Now, a lot of us won't remember the check guarantee card, but when you went in to buy things in a shop, you wrote a check. How did I know you were good for your money? Well, I had a plastic card, and on that plastic card, if my signature matched that on my check, it guaranteed the check to a certain amount of money. It went for 100, it went to 200. I think the final limit was, the final throws of check guarantee cards in the UK was £250. Seems to me that the danger of that check guarantee card is the innovation. The amount happened at the time that the payment type as a check guarantee card was in free fall. And the danger is with the debit card as well. If we keep upping the limit within the debit card, then actually we're missing it, and we're reinforcing the use of a token that needs to move. And as I'm here in Germany at the moment, perhaps we should say Auf Wiedersehen to the contactless card, the physical card, and Guten Tag to making digital payments wallets. If you wondered by my background where I am, I'm at a spy station where the West used to listen to the East and try and interpret what was happening with the movement of missiles and communications when we had the Cold War and the split, particularly in Germany and in Berlin, particularly with East and West Germany. So I'm here in the listening station, able to share Payments Unpacked live with you today. The second of my three stories is, the first thing, thanks for tuning in. I can see loads of people who have joined in Substack Live. Please leave a message, a question, put your thumbs up, whatever you want to do. It'd be great to see some feedback from the folk today. The second story is around direct debit. Now, direct debit in the UK, many of you will know that I used to be the chief executive of direct debit here running in the UK. The franchise has built up to 5 billion transactions a year. Transactions are very much embedded into the way we pay for the goods and services that we provide. I always have a smile when I think about direct debit. My grandmother would never use direct debit. My parents said, do you know what Michael does? Do you know what job he does? He runs this scheme in the UK. She says, I still don't trust it. Now, I don't know about you. My grandmother didn't trust it, but I use it and I've got about 30. I counted up the other day. In fact, I've just got rid of 2 because I cancelled some 2 BT contracts, British Telecom contracts. So I'm now down to 28. But have you ever wondered what use people are making direct debit do for, and as it's expanding its use and it's growing to 5 billion transactions a year, what sectors are growing for direct debits and what sectors are falling away? Now, some release PaymentPay.uk released some sector analysis a little while ago. Mike Hutchinson, you'll find him on LinkedIn, did some analysis of this and shared some points in terms of where growth is happening and decline is happening in direct debit. Business to business transactions, an area for direct debit that, to be honest, was always very difficult to crack. It was great business to consumer, but business to business always reluctant in terms of direct debits, but up 35%. And within that category, business rates up by 63%. Interestingly, life insurance use up 52% in terms of direct debit. And perhaps as we worry about our cars and maintenance, breakdown cover was up 15%. Interesting to also just see some changes around health, around road tax, the way we tax a car by direct debit, a massive win for DVLA when I got them to take direct debit on board, and opticians growing as well, maybe reflecting a different model for us buying contact lenses or paying monthly for our glasses and our vision products. Charities and mobile payments are about static, so that's probably fine. I mean, maybe we'll see things change if there's an economic downturn in terms of charity. But the rules for use of direct debits are in terms of gyms, car insurance, funding our wallet. Interestingly, paying our TV license. We hear a lot about people paying their TV, not paying their TV license, but TVLA has seen some of that sector drop. But the biggest drop, this is where technology is changing and our payments are catching up with it. The biggest drop are around newspapers and magazines. So obviously, as we consume written material in a more digital form, our method of paying for them is changing. And we've seen a significant drop in people using direct debit for newspaper and magazines for the traditional incumbent media. The other thing I found interesting is I always used to love direct debit and be in charge of it because actually the failure rates were really, really low. But we've now found that unpaid direct debits are risen by 17%. Now, that's quite a significant event. And we need to think about why that might be happening. But actually, more importantly, when direct debits fail, what happens? Because the good and the service underneath it has been consumed. It needs to be paid for. So do we revert to a second direct debit, a variable recurring payment, a card payment, but a 17% interest increase in unpaid direct debits, I think, is quite significant. Interestingly, amongst the 5 billion transactions a year, there's around 500 million of those transactions are uncoded. So who knows when you lift the box on the uncoded direct debit transactions in terms of what they're actually for and what sectors they're being used for. So that's some insights in terms of how direct debits are being used, where we're seeing growth and decline. You'll find a lot of this information on my website, payments-unpacked.com. You can subscribe to the newsletter and you'll get this information through the course of the week. If you're already a subscriber, appreciate it. Fantastic. That's really great to see. But if you have yet to subscribe, payments-unpacked.com, and you'll find out a load of the information from there. The final subject I just wanted to cover today was very much a topic that was very vocal at Merchant Payment Excellence here in Berlin this week. It was about sovereignty of payments. Because when we think about payments and the infrastructure and the wires and the pipes that these transactions go through, they just happen, right? There's never an issue, is it? It's just like gas or water or electric. It just sort of happens. It's the plumbing. And I want you to think about Mario the plumber. You know, we've got lots of Marios keeping our payment systems working in the United Kingdom, across Europe, and across the world. And very quietly just getting on their job with like Mario, making sure payments run smoothly. And you know, payment systems are fantastic until they go wrong. And that's when we really know about it. And if we think about the wider circumstances of the country, the Europe, and of the world at the moment. I'm here at an East-West spy station. After all, they're talking about what happened in the Cold War, but we've got a war going on presently. What about those geopolitical events and the impact they have on the reliability of our payment systems that we depend on every day? What about the ownership of those systems? What are the consequences of the certain ownership of that? And who's controlling our systems? Um, to a certain extent, we were in charge of our own destiny here in the UK. We had a person-to-person app called PayM. We shuttered it. We had our own domestic system for making payments, a domestic card system called Switch. We sold it to Maestro, and Maestro became part of MasterCard. And of course, we had a thing called VocaLink that processed backs, direct debit, direct credit, and processed faster payments. And of course, we sold that to MasterCard as well. So I think those things we consciously done, we can't really moan about it, but we do need to think about the sovereignty of our payment systems in the UK, because particularly in the UK, but obviously other countries as well, we see a dominance of two global infrastructures processing all our payments. And as the United Kingdom, as Europe, are we going to accept the challenge and start thinking about, are we happy with that, or are we going to do something about that? We've seen Sweden talk about holding cash, but if you listen to underneath of what the Swedish central bank they were saying, they were thinking about things like who owns the systems. They were thinking of things like online versus offline payments. They were thinking about end-to-end ownership and control. And it's important to say, well, you might say we've got some safeguards. We've got a data center in Europe. We've got this protection and that protection against a global system. But actually, if you've got a global system and the authorities in the home nation say, just give me that data and give it now, will they be able to hold it back? Will they be able to say, no, that's European data on a data center somewhere in the continent of Europe? I'm not sure. So we need to think about the ownership of the data. And as we start to think about infrastructure, and are we going to have something in the UK that's just for us and we are sovereign and we're responsible for that payment system, or are we going to do something in terms of continental Europe, or are we going to stay dependent upon global players? We've got to think about the whole stack from soup to nuts. We just can't think just about the payment system. We have to think about the interconnectivity. We have to think about the settlement arrangements. We have to think about the brand, the sticker on the door, and what are people buying into. So I think if we start to think about sovereignty of our payment systems, it's not just about a data center. It's not just about a particular pipe. It's the whole thing from soup to nuts. And maybe, just maybe, we need a bus for payments. Who knows? Let's see if we do. And this is Payments Unpacked from a very cold Berlin this afternoon. West Spy Station. It's been great to share some thoughts and 3 stories with you for this week. Do subscribe to payments-unpacked.com, and I'll share my newsletters through the course of the week. Failing that, we'll be back in UK next week, and we'll be back on with Payments Unpacked Live at 1 p.m. UK time. Thanks for listening.